Hi, I'm Andy and this is Investing Book Highlights. There's a large range of investing books to choose from. My videos will make it easy for you to pick your next one. The Motley Fool Investment Guide 3rd edition was the 28th investing book I read. Written by David and Tom Gardner in 2017, it is 304 pages and I made highlights on 59 pages. I'd been listening to the Motley Fool podcasts for a fair few months and this book was mentioned on one of the episodes. It was probably either David or Tom as they appear on the podcasts every so often. What took me by surprise when I began reading the book was that Tom and David are growth investors, not value investors. It's not something I had picked up on listening to the podcasts. Don't get me wrong, there's nothing wrong with being a growth investor. It was just a surprise, that's all. It did, however, teach me about some differences between value investing and growth investing. I'd recommend this book to beginner investor readers, especially to learn about some differences between value investing and growth investing. It's written with that Motley Fool cheeky tone, which is synonymous with David and Tom. The majority of the book is about their structure of investing, but they also briefly discuss mutual funds, index funds, financials, and options, but in a really understandable way for beginner investors. I'm not going to use this video to debate value investing versus growth investing, or growth investing versus value investing. The highlights I've chosen will simply cover a few aspects of growth investing. The first highlight comes from page 143. Investing in great companies early in their high growth stages, then holding them for the long term will provide the highest possible returns, period. David and Tom look for great companies, not mediocre companies or companies that we shouldn't be investing in, great companies. But they try to find them early in the growth stages. They view themselves as part owners of a business and as such are in it for the long term. This investing approach, they feel, gives the most successful portfolio success. The second highlight is from page 150. While there's nothing wrong with getting something on sale, we don't mind buying high. I like this small nod to value investing. David and Tom make the point here, sometimes a margin of safety isn't required. They don't have a problem buying great companies at what seems to be high prices, because over the decades they have made high price purchases, and in some cases those purchases have doubled and then doubled again, all without a margin of safety, giving them a very satisfactory portfolio return. The final highlight comes from page 158. It's critical for investors to know upfront that you will experience more volatility with our approach than with more traditional conservative investing styles. I like that David and Tom are honest about their investing style. Investing in companies in their growth stages could lead your portfolio anywhere. Will the companies continue to grow? Will the growth suddenly stop? Will you invest in more losers than winners? You need to be honest with yourself about whether growth investing suits you. If you're interested in investing in newer industry-leading companies and can handle more volatility than other forms of investing, maybe growth investing is for you. Thank you David and Tom Gardner for writing the Motley Fool Investment Guide. In each video I tally up the cost of the books I've read. As this was book 28, the total cost is $800.12 and that's in Australian dollars. To help build this channel, click like and subscribe. And what are your thoughts on growth investing? Leave a comment or question below and I'll be sure to follow up. And I hope your day is full of highlights.